Breaking news from Europe. A record-setting bank fraud scheme has been uncovered, exposing a vast network of corruption spanning multiple countries. Authorities report millions of euros lost to organised financial crime through VAT schemes, fraudulent investments, and tax evasion tactics. Here's what we know so far about how this scheme worked, who's involved, and the wider implications. This investigation began when European authorities, led by the European Public Prosecutor's Office, EPO, teamed up with Europol and local financial crime agencies. What started as an inquiry has now become a multi-country probe involving Germany, France, Spain, and beyond. Criminals used sophisticated financial tactics to evade detection, marking this case as one of Europe's largest bank fraud investigations to date. The fraud centered on manipulating VAT, logically, value-added tax laws across borders, primarily through a technique known as carousel fraud. In carousel fraud, criminals trade goods across EU and non-EU countries, creating fake sales to claim VAT refunds on non-existent transactions. Here's how it worked. Goods, such as high-value electronics, particularly used mobile phones, were imported into Europe from the US and UAE, and were then traded between companies in Germany, Italy, and Slovenia. Each transaction was designed to falsely claim tax exemptions and reduce VAT payments while allowing the fraudsters to turn illegal profits. The EPO reports that the suspects used fake invoices, shell companies, and falsified sales records to move these funds. They funneled profits through multiple layers of corporations and bank accounts across Europe to evade detection. Preliminary reports suggest that tax authorities have lost around 19 million euros, roughly $20.7 million, though ongoing investigations may reveal even higher losses. The wider impact. Though it's a case centered in Europe, the problem of financial crime is far-reaching. A global report indicated that more than $3 trillion in illicit transactions passed through the world's financial systems in 2023, swing illustrating the need for stronger international cooperation and regulation. Authorities refer to this investigation as Operation Concertina, which has so far involved 25 coordinated raids across 6 countries, resulting in the seizure of large amounts of cash, cryptocurrency, and assets. While these actions are a crucial start, officials caution that this is likely just one of many such operations in play. Criminals often evade detection because they exploit gaps in cross-border regulations, using real-time payment systems to move funds rapidly. These systems, while convenient for consumers, have made it easier for fraudsters to act with minimal oversight. Financial experts warn that unless banks and regulatory bodies coordinate, similar fraud schemes will continue to surface. Key suspects and companies. Authorities have named 4 individuals as primary suspects, each allegedly involved in operating a network of companies across Germany, Bulgaria, and Slovenia. These suspects are thought to have established shell companies to exploit VAT exemptions, trading goods across borders, and claiming refunds on VAT that were never actually paid. The companies themselves appeared legitimate on the surface, but were designed to handle transactions in ways that complicated tracking funds. Investigators have already frozen multiple bank accounts linked to these suspects, and they are scrutinizing assets across Europe for further connections to the scheme. Financial crime's rising complexity. This case shines a spotlight on the escalating sophistication of financial fraud. In recent years, schemes have evolved, involving AI-driven cyber scams, money mule networks, and the manipulation of complex regulatory loopholes. In Europe alone, VAT fraud and tax evasion have led to billions of euros in losses annually. Financial experts believe that to keep up, anti-fraud strategies must involve stronger AI-based monitoring, harsher penalties for offenders, and better information sharing systems between banks and governments. Efforts from agencies such as the European Anti-Fraud Office, OLAF, show that governments are already ramping up anti-fraud collaboration, but the scale of fraud remains a formidable challenge. What this means for citizens. For everyday citizens, crimes like these don't just impact governments, they have real consequences for people's finances. Lost tax revenue means fewer resources for essential services, and banks often pass on the costs of fraud through higher fees and tighter lending conditions. It's crucial to be vigilant against fraud on an individual level. Monitor your financial accounts, beware of phishing scams, and report any suspicious transactions immediately. As the EU responds to this case, regulatory changes may lead to stricter oversight of cross-border financial transactions. While this could mean increased compliance steps for legitimate businesses, it's a necessary step to protect the financial ecosystem. Future steps and takeaways. The European fraud scheme has highlighted the lengths criminals will go to exploit the financial system and underscores the importance of proactive measures. Authorities like the EPPO and EUPOL are doing essential work, but it's up to everyone, regulators, financial institutions, and citizens alike, to remain vigilant, informed, and ready to act against these growing threats. As more details emerge, we'll keep you updated on this developing story. Don't forget to stay tuned to watch the latest news on global finance, fraud prevention, and regulatory changes impacting your money. Stay alert, stay informed, and thanks for watching.